Welcome to the weekly swing low. It's September 27th, 2025. So, September is coming to a close, and we're finally getting a bit of a pullback here, although we closed Friday as a swing low. So, let's just jump right into it. SPY. So, we'll look at the daily first. So, I would say overall, good news. We need a pullback. This thing needs a pullback to stay healthy. On Friday, we closed as a swing low. We have a swing high as of the swing high is active as of Tuesday, September 23rd. The low for that day is 661.98, so basically just below 662. We closed the next day below that 662 level and then made a lower low. The catch is Friday we closed as a swing low. So by closing above $659.41 on SPY, that forms a swing low. And so that swing high came on day 36. This swing low came on day 38. So it's entirely possible that this is a daily cycle low, especially since this day, like this Thursday, that would be the daily cycle low, it closed below the 10 period moving average. You generally want to see that in a daily cycle low. And now we're getting this swing low. Here's the catch though. This could be the first leg down, and this is just forming a little higher low, a lower high, excuse me, and then it's going to make another lower low. We don't know, but right now you could play this with a clear stop, right? Again, so that $659.41 is your line in the sand. If you look at the weekly, this is week 24, so that's the other catch. Not only is this a daily cycle decline, we need a weekly. We're going to have some kind of weekly cycle decline at some point, right? Doesn't have to be a huge one by any means, but last week was week 24. We did make a higher high, and so it's really simple. The low for last week was $654.41. If we close next week below that, that is a weekly swing high. That is what we would need to see to get a weekly cycle decline. Now, remember, going back several weeks, this is all the way back to the end of July, we had this weekly candle where we had a swing high close, right? That this was a swing high, but we obviously recovered. So just because we get a swing high doesn't mean we're going to get the weekly cycle decline, but that would be the first step. Other thing to note, how elevated we are above the 10-week moving average. We did retest it back at the beginning of September, but that is down below 640 around 644. And so if we go back to the daily actually really quickly, if you think about what a 50% retracement of this daily cycle advance would be, so this 36-day rally, it would be getting us down about, it would be down about 3.8% and down to around 642. Now, it doesn't mean we have to get a 50% retracement by any means. I think we could even go deeper. If anything, I would say this is probably a target that would get you'd be down about 5% at that point, which is, just enough to kind of scare people a little bit, and structurally doesn't really break things down. It's just kind of a retest of these prior lows. And so that to me seems like the range you'd be looking for. Again, that's assuming we didn't hit the we don't have the bottom on Friday. I think you could trade this. I'm inclined to think there's a good chance we do get another lower low. So I'm going to watch for the reaction Monday. And if you think bigger picture, this is only month 5 of a new advance, right? After this decline. I mean, this was a very violent, quick flush, but I mean, look at the rebound we've had so far. That said, this is going to retrace at some point. I mean, look at this string of green candles all making higher highs, higher high, higher high, higher high, higher high. It's going to retrace at some point. And so, but we're early. Now, looking at the big picture, if you look at the S&P, people are starting to talk about, late 1990s sort of vibes. This is the late 1990s. This is 1995. A gigantic rally for the market. Look at these are yearly candles here. This is S&P 500. Look at 1994. Not a great year, an ugly doji, but then a big higher high the next year. Big higher high in 1996. Big higher high in 1997. Big higher high in 1998. And then the blow off, actually the blow off for the S&P came in 2000, of course. So, you had another higher high in 1999. And then this candle, of course, started off red, made this high here, and then it flushed lower. And then you had a compound bearish outside candle. So you had 3 more years of downside. I'm not saying we're going to get this next year, but at some point, right, like the same way, like, zooming out, we're about to do this is about to do something like this, is what I suspect, like big picture, right? And so I think there's still a lot of gains to go. That's just like really kind of zooming out. Okay, so we're gonna go through the other tickers. It's a very similar story. They've all printed swing lows, and so it's just a question of can they hold them, or do we get that other leg lower? I'm inclined to think we get the other leg lower, especially since we need a weekly cycle decline, and so a deeper daily cycle decline would give us the weekly cycle decline that we need is my rationale. But I'm prepared to buy it if we see this swing low hold. And I would say, tactically speaking, that swing low level is going to be your battleground, right? Like very specifically, that what is that, 659 $659.41. Not that exact precise level, but that area, I'd be shocked if price doesn't at least retest it. And if it can survive that retest, that is a beautiful buying opportunity. So what is that level for QQQ? So QQQ also made a little swing high, not as forceful, not as dramatic, but at $595.12. Same picture for the weekly chart for QQQ. For QQQ, that weekly low is $588.50. That's your line in the sand. That would form a weekly swing high if we were to see that. For DIA, we also got a swing low in place. That's as long as we stay above $461.08. And on the weekly candle, your low is $457.71. IWM also swing low on Friday. That's at $240 basically, and your low from last week is $237.55. SMH, so this is interesting. Did something a little different. So Friday also a swing low, but just barely, and I forget what you call this candle with a really small body and long lower wick. So certainly not super bearish because it got bought up. But for SMH, it's got to stay above $322.03 on the daily chart. But this one didn't close below the 10-period moving average. That's an interesting one, right? Like SPY, you notice, right? Like SPY closed below this line, which is your 10-period moving average, and SMH did not, which is a sign of strength. All right, let's move on to the Dixie. Oh, and the low for the SMH on the weekly is $313.60. All right, moving on to the Dixie. So Dixie is in a little daily cycle advance right now, very clear. And it is Friday was day 7. Now we have the high is on day 6 on Thursday so far. And if we get a close below 97.74, that is a daily swing high and a potential the start of a daily cycle decline, right? Like if we see something like this on Monday, right? So this becomes the evidence that we potentially started a daily cycle decline, which is what I would expect. I would expect we're going to continue to like if you look at the weekly chart, last week was week 23, and it actually is a swing low on the weekly. So by closing above $97.81, this forms a weekly swing low. So you have the possibility that this was a weekly cycle low on week 22. But again, that same scenario always exists, that the current low is just setting up a lower high. And so I have to watch for that. Again, if you start to see a daily cycle decline, like if that was the daily cycle high on Thursday, then that means this weekly cycle is probably going to extend, and week 22 was not the bottom. And so that's the Dixie. And longer and bigger picture, the Dixie, it looks like it's bear flagging. Like these last 3 months have been a bear flag of this move down. Now, the counter to that is that this little hammer holds, and this becomes a big low after undercutting this one. So it's very binary here. U.S. 10-year Treasury. So this thing, similar pattern to the Dixie at this point, sporting a little swing low here on the weekly. So that was week. So if we have a weekly cycle, like this was a new weekly cycle, it would be week 1 of a new weekly cycle. The swing low is active. So actually, the swing low, is that a low? So that's below 3.99. Yeah, right. So by closing above 4.14. So that becomes your line in the sand. 4.14. This could be a weekly cycle low. Again, just like Dixie, it's kind of early for a weekly cycle, for this to be a new weekly cycle. And as you can see, you have these bounces. It's natural. You're going to have bounces that will fail. But again, we'll watch the charts for evidence of that failure. We'll see a swing high on a lower time frame, which in this case would be the daily, right? So just like Dixie, the high here so far is on Thursday, and the low for this candle is 4.14. So a move below 4.14 creates a daily swing low, a daily swing high, excuse me, and that means that this daily cycle advance may be over, and we're starting the daily cycle decline, which means a weekly cycle can continue to decline as well. Right. Moving on to oil, it continues to slosh around. Okay, so oil is printing a little weekly cycle, a little. So this is actually a bullish outside weekly candle. So by it's got to hold above, call it $61.60, which is the cluster of these lows here. And at some point this weekly cycle decline is going to end, and you will get a bounce for at least a few weeks. So this could be the start of it. You want to watch that 61.61 level. TLT